Hello and good morning. It's not morning anymore, but nevertheless. So I'm going to explain this report that I have created for. By the way, I am by the shore of Gulf of Mexico, and I'm enjoying the weather, as you can see. So I'm going to talk about Report 1021. So let me share my screen first. And where is it? Share. Share. Share what? Yeah. Screen. Share screen. Say. So you should be, yes. Okay. So now you see my screen. Let me move this. Is there a way I move this out? Okay, stop sharing. Okay, so now you're seeing my screen and you see me up here. All right. This is the report. This is a picture of it. This is the Excel file. So I go to both of them. Um, as you can see, the report is called Taxable Portion of Social Security Retirement Benefits, ROS Conversion, RMD, Required Minimum Distribution, and Income Tax Liability Projection. So right now it's 252. I think I started 250. This will take about 1 hour. So, um, so that's so this report does these things. And then in addition to these, I have added some expenses and some other lines that help to build a report like this, which basically it takes all this. um See, so for example, taxpayer taxpayer of full retirement age. It's assumed that the taxpayer is full retirement age. Spouse could be younger, uh, but in the examples that I have provided numbers for in this report, they're both considered at the retirement age. By that I mean, let me so that I don't create confusion. By that I mean all the numbers that I put here for itemized deduction and for state equivalents of it are the both spouse and wife, and they're both 65, and there is no kids involved. But of course that can change. I'll get back to it. Also, I have to go fast because if I don't, I cannot do it in 1 hour. Even I cannot, I won't be able to explain everything. But so I'm going fast a little bit. Uh, so here it says taxpayer of full retirement age spouse. Uh, this is the main source of income for somebody who is retired. Um, and then interest and dividend. Then there's this thing I have called, it's my own creation, non-taxables based on untouchables. Non-taxables meaning things that a tax doesn't apply to them, like some interest, for example, or long-term capital gain to a certain limit. There is no tax on it. And then there is this thing here, RMD, required minimum distribution, which is calculated by the report. So there is no user doesn't do anything here. Let me switch to here. So then that this is the RMD. There are some numbers here. Don't let them distract you. So this is just some numbers that if we have time, I go through them. And then non-taxable RMD. By the way, I forgot about this line. This line is the first thing here, the taxable portion of Social Security retirement benefits. So this line calculates, automatically calculates the taxable portion of your Social Security retirement benefits. Normally, they don't have the tax. They don't tax doesn't apply to this normally unless you're getting paid at the very top rate. Um, but if you have other income in your if you have other income, then you may end up paying taxes on this. And for example, in this example, which is just as you can see, this guy has 30,000 in Social Security retirement benefit, which normally has zero taxable portion. But since he has this thing here, for example, conversion to Roth and some other income items, then some of it is taxable. And then you have uh, after non-taxable, then you have the required minimum distribution, which again is calculated automatically by the report based on, and then this is where it gets done, and then it's transferred to this. Also, in this report, the very bottom of it, the bottom portion of it relates to the RMD, to this line. Then conversion to Roth. Conversion to Roth is very important if you have a retirement account. I'm sorry, not retirement account. If you have individual retirement account and if it's traditional IRA, traditional individual retirement account, then those get, you have to distribute them after certain age. The age and this distribution and the amount of it, they're all automatically calculated based on the information that the user puts here in these green cells. I'll go get to those shortly. And then conversion to Roth. The conversion to Roth, again, as I will explain here, is one of the main reasons this report was created to help with. And when I read this to you guys, I'll explain just about that very subject. Okay, so conversion to Roth, other income loss excluding capital loss. This line becomes very useful if you have other. Let's say you're retired and you're getting retirement income, but at the same time you work. So you can put the W-2 from that work in here, in this line. That's just, I just give like one or two examples for each so that it gives you some idea. Like then capital loss including carryovers. This if you have capital losses carry over, then you use this line. AGI Maggie, very important to watch because as you can see, this chart here, this information here, comment, in the comment for that cell, it tells you, for example, if you're single and for 2024, the limit for this line is 103,000. So if you go over that, then you have to pay higher Medicare premiums, which I hate doing that. I don't like that. So it's very, so it helps me, for example, in this case, actually, one of the things that it helps me is, well, the whole benefit of this report is, the whole thing is to give you to give the user information as quickly as possible ahead of time. So once you put your data, then see, this is how long it takes to run the report. So let's say 1,000, 2,000, 3,000, 4,000. So it's like 4 seconds. Okay. It takes 3, 4 seconds. And then standard or itemized deduction, which comes from here, from these guys here. And as I mentioned before, these are right now the amount represent two taxpayer and spouse, and they're both considered 65. These numbers that are here representative of that. You can change them. You can, for example, override this. It explains here. Say, like, let's say I am going to use itemized deduction instead of, these are standard deductions, by the way. Let's say I have a thing. Uh, First of all, you can put negative positive number here. So let's say error message. Okay, so then so let's say I'm going to use the standard itemized deduction, and my deduction is 20,000. Okay. Now, if I run the report, it will just use the 20,000. It used based on the 20,000. So it turns to 20,000. But now, if I want to bring back the default number that was here before, I just delete this and run this, and then this is the number that was here before, and it comes from here. It comes from here. So basically, if I change it here, then those number will change also. But if I just input a number here, basically I override these things. Now, so then after this, then there is the federal taxable income. Now, as you noticed, so you put the income, expense, things like that, and then basically those number should end up being your federal taxable income, and this number should match your tax return. And by the way, your tax return is the best source for a lot of information that you input here on these. You know how this report is called 1021? 21 question with 10-year forecast, 10-year forecast, 21 question. Most of these 21 questions Yeah, a good source for it is your tax return, prior year tax return. Okay. Or the, or if you've done it for this year, then it would be this year tax return. Because remember that this report is not to do your tax return. This report is for the purpose of doing this. Exactly what it says here. Plus some more. But it doesn't do the tax return. But if you put the taxable income for federal by way of, putting these thing numbers here and reaching your taxable, and for state, it's a plug number actually. So you look at your return and you put your state taxable income here, which then gets picked up on these lines here. Then after that, you have um, after that you have state tax, which again is calculated automatically based on um, for the state, as you know, California, in a very dumb decision, in my opinion, added a table on top of the tax bracket and rates that were already in place. They added a table for people who have California taxable income of 100,000 or less. So if your income is 100,000 or less, if your taxable income for California, if your California taxable income is 100,000 or less, you need to use a table instead of the tax return, then instead of the tax bracket. And by that, I mean this. By that, I mean these are the tax bracket and rates for state. The higher, darker color is the state, lighter ones are federal. So these are federal, these are state. Uh, and then, so these are the brackets and rates, which one needs to update every year, every year. And then, as you can see, it's for 2 years, 2 years, 24, 25. So state normally doesn't provide next year. Federal normally does. And so these are brackets and rates. And as I mentioned, state added a table for 100,000 or less. And the table is here. And the table was in a PDF on whatever, on, it was not dissected, or I forgot what's the name, on anyway, it was in a so if you paste it, if you copy it from the PDF and paste it into Excel, for example, it would put it all in one row. So I had to do tricks to get that. And then here, so after you come up with the tax, then you have the effective rate is calculated automatically for both federal and state. Then you have other taxes, penalties, refunds, and credits, which I explain more when we go here. Then you have total tax, then all other expenses, then total expenses. Total expenses, the more accurate you estimate your total expenses, the more accurate this report would be in general. This last line is it basically, I have turned this thing into a cash flow statement, and I have some like three version of it here that if you go, I'm not going to go into it because we don't have time, but basically it includes and excludes some lines for the purpose of coming up with the cash flow over under. So these are all under in this example. So, and then, so I think there are a few things, a few other things I have to mention here. One to mention this, and then mention about this thing here, why I have changed the color. And let me go here now. And this, as I said, is for RMD. You don't do anything here really. Even though these are green, you don't need to do anything here. These are just like, these are mostly informative. If the date is not correct, because these are all formulas, you can change it, but you don't need to change it really. Then we go here. Okay. So let me see. What time is it? 3:11. Eight. Okay, so 10, another 40 minutes. Okay. Now let's go here. First of all, there are required, you say like darker green, lighter green. Darker green is required input, lighter green optional. Okay. So now to prove to you why the report is called 1021. Okay, 10 years of forecast. And here you go 21 question. One, your filing status. It says marital status here, but it's really filing status. And then your date of birth, two. This um, inflation percentage, three, which is provided by Social Security Office. Then these four and five, they become green based on what you, if I choose, for example, married filing jointly, then this will become green. It just tells you which one applies to which. If I separately here. And so let's go back to single. Uh, so one, two, three, four, five. This is not thing. It's nothing. These two are not darker green anyway. But I count this, um, even though it's not darker green. So that's one, two, three, four, five, six, seven, eight. These two are related to taxpayer having a spouse who is 10 years or more younger, these two. Then, so I forgot how many. One, two, three, four, five, six, seven, eight, right? 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, and 21. For this, you don't have to, you can combine all of them and put it in just one. There is no need to separate them. So that's 21 question. Now let me go. through them. Filing status is very easy. You choose your filing status. Date of birth, you put it in this format in here. So this, as I mentioned, comes from uh, Social Security. I can override it if I want, just like these. I can override it. For example, I can put whatever it is here, 2.5. I can put 6, 5, 5%, and run this report based on 5%. What it does, it causes this thing to increase. This. Because these are, but the reason that there is two columns for this is because normally when you uh, retire, the first you don't retire exactly at the beginning or end of the year. Normally, it's somewhere between the beginning and the end of the year. Of course, you can talk to them and tell them like you wanted to start from when, but assuming that the first year is not 12 months, so I have two column for it, and then these get calculated based on this thing and based on this year instead of this year, because this we know represents full year. This we are not sure. Um, and then so um, let me at this point read this to you. And to read it, I go back to the picture because I can make it bigger. So let's see. If I make this bigger, hmm? Oh, okay, that's enough. All right. So I'm going to read this. Taxpayer full retirement age is assumed. I mentioned this before. The spouse could be younger. Project, modify, and reproject even more accurately, right? Okay, even more accurately. This is the main tab. User data is accepted in green cells, but the report is designed so that it can be further fine-tuned by editing green cells in other tabs too. Remember that cell I had changed the color? It's talking about that. For example, here, uh, green cell in the other tab, I changed it and I changed the color so that I can remember. I could have changed it to any other color. I decided to change it to this color. Okay, that's so. This helps you if you want to go back to default or what it was before. It helps you where you changed. Uh, so let's go back here. Let's go back. Let's go back here. Okay, this is the mental. No, 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 no. This report is okay. So green cells in other tab too. This report is in a sense interactive and populates only blank cells in this tab. On this tab, only blank cells are populated. So if you put a number in a cell, and zero is a number, if you put that, then it won't override it. Okay, so no, on the report, okay. On the report tab, only blank or zero value cells are populated. So that's why it's kind of interactive. You can run the report, and then if you're not, if you, I have used this report 3 years. I haven't come to that situation that I need to change something for further, well, like for year 2 or 3 or 4, except for a few items. But if you want, if you're the type of person that is like that, then you can use this. This report is in, okay. Now, based on your input and the applicable laws, and by laws, we are referring to tax laws and accounting regulations, things like that. This report accurately calculates the following: taxable portion of Social Security retirement benefits, that's one. Two, required minimum distribution. Three, federal and California income tax liabilities based on the current tax year, based on the current year bracket and rates and tables. Next year, if available, which I mentioned, state normally is not, federal normally is, and table. It should say table, and in the file actually it does. But I haven't uploaded the figure picture of it. Okay, from now here, from full retirement age, 66, 67, to the to the to the start of RMD, which is like about 73. Okay, 73, 67, 68. 3 years there, or from there, 3 years here. So it's a period of 5 to 6 years. Okay. From full retirement age to the start of RMD are the years most decisively benefited by this report. The report is easy to maintain, and by the why that is? Why am I saying this? First of all, that's one of the ways that I have used this report, because if you have, as I mentioned before, if you have individual retirement account and they are, for example, in traditional individual retirement account, then sometimes if the tax rate is going to, if this is one of the ways you can, this is one of the reasons. It's not all of the reasons, but one of the reasons is that one of the reasons for doing Ross conversion is, if you anticipate that the income tax rate are going to increase, go up. If they're going to go down, you shouldn't do this, you know. But we never know whether they're going to go up or down. And then there are other reasons for it, because once you do it, then it grows with tax free, basically. Uh, so, in my opinion, it is to one person advantage to do this. And as I mentioned, this is one of the main benefits of using this report. Sorry, I meant to go. I meant to go here. From Florida. No. Okay. The report is easy to maintain and can be used year after year. The maintenance, let me show you. The maintenance Well, it depends. Like, for example, the normal maintenance, I should say, because uh, the maintenance involves changing these, changing. Normally, these don't change. Changing basically the brackets and and well, if you're individual, you just do it for your filing status. If you're using this for business, then you change it for all statuses. Um, and updating this, if this comes with Social Security, from Social Security, and this, they need to get updated every year. And basically, then you need to check for some other. These don't change for like 10 years. They will on. These are life expectancy uh, factors which are used in. Um, they are used in the calculation of required minimum distribution, uh, and other than that, there is this table which they added, as I mentioned, this year. So I have a I think this table is not going to change. That's my that is my that is my take on my understanding of this. No, it doesn't say anywhere, but I think the table stays the same. But anyway, so that's the update. Normally, the update is just updating the tax bracket. Uh, Other than this last time that I had to change that, include basically this table in the whole program. Uh, Other than that, the update really just the tax bracket, and really that's it, the tax bracket. So that's the only update. And it doesn't happen, if there is no unusual thing like this table that had to do, it doesn't take more than like once you get used to it, it doesn't get more than 10-15 minutes to update every year. And once you update it, then after that it's just you going to the report, as I mentioned, and changing cells depending on if it makes sense to you. This report doesn't find full return. This report is easy to maintain and can be used year after year. Find valuable summary information about the Ross conversion on on report page, column BD. Uh, Report page, I am referring to this sheet. Okay, this is the report sheet. And if you go here to column B, the BD, whatever it said over there, but instead of going there, I'm just gonna go, instead of going there, BD, I'm just gonna show it to you here. And this information is like a packed information. There is so much information here. If you are in this, if you're in this situation, um, Ross conversion, things like that, it's very helpful, very, very, very helpful. I'm not going to read it, but it's really very in a very summary form, and full of information. Okay, so Then we go to this report doesn't cover inherited IRA. So if you have an inherited IRA, this doesn't cover that. Other items in the report are also automatically populated based on your input on this sheet. Conversely, if you want to empty the report, you only need to delete your inputs on this tab, unless you have made other inputs, in which case you should be you should you should they should be deleted as well. Very, very, very extremely important. Income taxes are due quarterly and must be paid as such to avoid penalty by IRS and franchise tax board. Let me just stress on this. Don't think that if you're using this report, I'm telling this to myself. If I'm using this report, I shouldn't be, you shouldn't be comfortable that, oh, so I did this, and next year I'm going to pay taxes. You converted or you did RMD. I'm going to do it by as required by law, paid next year by April 15th. No, no, no. If you that thing is based on pay as you work, and you pay as you as you work, you pay taxes, right? But when you have RMD, no taxes has been paid. So then this becomes very important, and IRS will charge you if you don't pay attention to this. So, for example, if you converted, or if you had RMD and you took the money out in the beginning of the year, then you need to make sure that you pay the taxes by the next quarter. Don't wait for the December 31st, or even worse, for April 15th of the next year to pay. Of course, that's the time to pay the your tax return, but you should have paid taxes earlier. Basically, this is the rule. Just follow this. Income taxes are due quarterly, no matter how you're doing your taxes, or no matter what, and must be paid quarterly. So this was very important, and I went through it. I think I mentioned these are automatic. Don't try to change this. These are accurately calculated and automatic. This one not. Let me show you. I mean, it's automatic, but so this cell here, for example, I can put, if I'm so this normally it's for a year, for it's the year that goes here, it's normally the year you're doing the tax return. So right now we are doing tax return for what year? For 2024. So it's 2024. But I can change it. I can put, for example, 2022, or 23, right? And then run this report. And if I do that, now these number won't change. You need to update these, because these are for 2024. But other than that, then you can see that now the report starts with 2023, and and as you can see, this guy, this is the one it mentioned here, that if you change the cell, other cells in other report, this thing here, it was relating to the. Okay. Now, okay. So let me quickly explain this. I want to explain this gain capital. Oh, I didn't finish this. Sorry. So here, 2023. Now let's say if I don't put anything here and I run, uh, it tells you it gives you this message: setting tab this that, and then you say okay, and it gives you 2024. The default would be 2024 because that's the thing. That's what we are doing right now. Uh, now I was going to go talk to you about this. This cell and this cell, they both have comment, and the comment is about capital gain and loss. And I don't want to read from it. I just tell you two things about capital gain loss. So both capital gain and loss have two types. They're either short term or long term. When you do your tax, when you not here, when you do your actual tax return, there is a schedule called a Schedule D. On a Schedule D, what happens is that first they bring short-term losses and gains and basically put those together, and you come up with a net gain or loss short term. You do the same thing for long term, you come up with a net loss or gain, then you combine those two. So at the end, you come up with something either short term or long term gain or loss. That's the process that happens every time. So that's the number one I was going to tell you. The process. This is the process that every time you have capital gain loss happens in your tax return, no matter what software you use. Number two, what I am suggesting or advising regarding this thing is this. Don't put yourself, and before I say that, as you know, capital gain in general has a lower tax compared to ordinary income. Capital gain is not considered ordinary income. Ordinary income normally has higher rate than capital gain. So normally you want something to be capital gain instead of ordinary income. Now, in addition to that, capital gain up to certain limit, I think for individual, it's somewhere here in this report also. I have provided that information. If if you have that, then so for example, for individual up to 50,000 something, if you have capital gain, you don't pay. If you have long term capital or short term capital gain, you don't pay taxes on them. Okay. So my advice is this. Don't put yourself in a situation where you end up using your capital loss against your net capital gain for that year for the process that I mentioned. Let's say you come up with a net capital gain. Don't put yourself in a position that you end up offsetting that capital gain against, because it's a mandatory process. You can't say, oh, I don't want to use my capital gain here. You have to. So I don't want to use my capital loss here for to offset my capital gain because you have to. So don't put yourself in a situation where you end up doing that because you basically waste your capital loss carryover. You didn't have to pay. Let's say you have 5,000 capital gain. Okay, you don't have to pay tax on it. As I mentioned, up to 50,000, you don't have to. So, but by doing the, but if you have capital loss carryover, you still you don't pay tax on it, but you offset it against your capital loss, which you could have used it for other, purposes. That's what I was going to say. But and plus the fact that if you look at the cell, it says 0 plus 0. So the third thing about this thing is that first of all, the number that you put here is not picked up by the report. It's only for you, so that you know how much you have. So it's like informational purposes, and the 0 plus 0 short term, long term, just so that you have it you have so you have capital loss, short term, long term. It doesn't matter, they both treated the same way, but I always like to keep it separate. So mm, what time is it? The time is 3:41. So we have 10 minutes only left. I mean, not only, as I said, for I don't want to go over 1 hour because I get tired too, and I'm sure the viewer gets tired too. Okay, so let me mention one of these things. I just remembered two more things that I need to mention. This is what I just explained. Same thing. These I've already mentioned. I already mentioned. Okay. This is where you actually input the data, right? And I mentioned that why there are 2 years here, except for as opposed to this thing. Let me first. I have to first mention. I hope I'm not confusing you right now. I am between which one to mention first. First year. Okay, here explains why first year. I already explained. Amounts are included. Okay. I think I did mention this. This line, sorry, this line here, this line, whatever you put here, those amounts are included in the calculation of the taxable portion of Social Security retirement benefit, but they're not included in the calculation of your federal taxable income and eventually your federal tax. Okay, so that's very important to know. And since we are here, and the last subject I talked about is capital gain, let me mention one thing here also. This is also related to capital gain. Uh, if you have capital gain, the way you treat it, you treat it two ways. For this report, mandatory, depending. So if you have capital gain, then the next question is that do you also have capital loss carryover? If the answer is no, I don't have capital loss carryover, then the way you put your capital gain is that you put it exactly on this line. And not directly here, you put it basically here. You put it in this row. Okay. Amounts are included in the calculation of taxable portion of Social Security retirement benefit and excluded from AGI, MAGI, and federal taxable income. Okay. This is if you, so you put it here, and then you also put the tax on this line. See other taxes, you put the tax on this line. If you have capital gain, and in answer to the question, do you have capital losses? Your answer is yes, as opposed to no, that was first example. Now, if it's yes, then you don't put your capital gain here. You put it in here, other income loss, excluding capital loss, you put your capital gain here, just like this user has 600. And then this user has 3,000 carryover capital gain. And you add this other thing here to this. This is basically the process of offsetting it. So you don't pay tax on it, but you're using your capital loss to offset that. That's what I was saying. So that's that. I hope these things make sense to you, because I don't have to. I don't have. There is no time to explain it anymore with examples. And but the thing is that the report is so easy to use, and it's so fast that you can do all these things yourself also. Uh, I mean, play with it. And don't worry, you cannot damage the report. There is no way you can damage the report. In fact, I encourage you to damage it. No, I don't, but I don't. Okay. Conversion to ROS. Okay, this is the other thing I was going to explain. Do not include estimated payments. Do not include estimated payments. So it says what? It doesn't. Other taxes, penalties, refunds. So if it's refund, put it as negative, and credit. If it's credit, put it as negative. Do not include. Do not include estimated payments. Do not include refunds. You're saying to include refund. Okay, be careful. Do not include refunds that are not received and are applied to estimated payments for next year. So basically, you only include the refunds that you actually receive into your bank account. The reason is that, well, the reason is that because that's how this report is designed, and because of these cash flow things that you have here, which I don't have time to explain, but you can play with that too. And just look at it, see what are included. You know, you can look at the formula to see how the formula is, how the formula is. Okay. I know it's going over 1 hour now. Yeah, enough. Okay, so I'm not done yet. Hold on. I am not done at all. Okay, so let's see. The total expenses, as I mentioned, if you the more accurate this is, the more accurate this report is, especially this portion of it, the cash under over. You know, because in terms of expenses, this is the total expenses, right? So it's very important for the purpose of cash flow. Uh, uh, Now, before I don't want to, maybe I'm jumping now from one to another, but I have to mention this. So let's say you finish the report and if you're doing it for yourself or if you're doing it for your client, especially if you're doing it for your client. But the way I do it for myself is that every year uh, I copy. Let's say I did this year, then next year. So then I create another file and I just put the actual years just for my own. I mean, you don't have to do it this way. I'm just saying that's how I use it. So, but especially if it's done for somebody else, then you can export the file. You press export. Again, it's very fast. And so this is the file that's get exported. Then you can say, well, this is the same file except that it doesn't have the VBA coding, and basically then you can save it. Then you save it, and when you save it, it asks you whether you want to do this or not. I don't want to say save right now, but basically, then if you say save, it asks you, do you want to include VBA? You're saying no, I don't want to, and then you basically save the file with whatever name that you have you want. Um, Let me see. And I think and then here, uh, if you want to do it the full version of it, of course you input everything. But for the purpose of this report, the only thing you need is just one cell here. That what is the see it says uh, projected or actual balance as of December 31st of the year prior to the RMD year. Because as you know, let's say your R&D starts in 2026. So then you go to your all the accounts that fall under these categories here. So which basically is the includes the traditional IRA accounts. It does not include Roth IRA accounts. Okay, so all of your traditional IRA accounts, you can add them up and put just one balance here as of December 31st. If you actually want the report to calculate your RMD for 2026, for example, you put the December 21st balance here and run the report, and it does that for you. But if you want, but then so let's say balance December 31st prior year report due IRS January 31st next year, and then all these things. R&D, then you do it during the year. Um, uh, there are other things, but right now I am tired, really. I can't talk anymore. And I think I mentioned most of the things that I wanted. Mm. I have placed a copy of the report in the. I have placed a copy of it in the. I have placed a copy of it in the group that I created in Facebook. I realized in Facebook you cannot upload Excel files unless you have unless you have unless what unless you have unless you create a group. So that's why I created the group. So a copy of the file is in there, and anybody interested can basically download. Once you download the file, before you open it, right click on the file name and go to properties. And when you go there, lower right version, uh, click on check basically when it says unblock, check unblock. By doing that, you unblock the VBA coding. Otherwise, it won't let you run the report. So that concludes my my thing, my presentation, and thank you for listening. And have a very good day. And I need to stop sharing. So goodbye. Mm. Oh, brother. Okay.